So here I have the euro. This is today's market. And the reason why I'm showing you on the replay is because I want to give you an example why I think it's more important to have two accounts to divide your risk. There's two ways to look at this. The first thing is, let's talk about what happens when you get yourself into trouble. Now, this happens to every single one of us, including me. I've made this mistake. We all have learned what a trend trade is and what is a counter trend trade, right? So let's say you're coming down, you see, look at the market right now. As you can see, the euro is in a strong downtrend. Our 15-minute says we're coming down. We're below our HMA. Our HMA on this chart, look, the candles are nice and red going below. And here we are on a 1 minute, we're going below, and we see all this momentum. And as you can see, when you see one of these things, what happens is you see that the market's coming down, and coming down. And before you know it, you want to grab a piece of the action because you missed the other two. So what happens is we all have done this. You see things are going, and you go ahead and you place your entry because you see everything's moving. Maybe you think it's going to come down to the R4 pivot, whatever your reason is, but you go ahead and you jump in. So we're going to go ahead and place a sell order here to go short for this nice downtrend. Okay. So before I talk about whether you're making 1 tick or 2 ticks or 5 ticks, some of you, maybe you think it's going to go down to 3008 and you want to go for more ticks. So I'm not going to talk about how many ticks just yet. I just want to talk about what can happen.
But I know it's too late because it's past the 90 days and it's past.
Am I breaking up? That's really strange. Okay. I sound fine? So maybe it's just a couple people. Maybe their internet's a little slow. Could be your internet. So what is the trigger for the strategy? Okay, well, I'm not talking about the rules for the strategies yet. I'm just talking about you see the markets coming down and you think you see something and you want to go short. That happens to all of us. Obviously, this is not a good entry because per the rules of the trend trade, you should have gotten in here. Then you would have been profitable. But like I said, we're talking about risk now. Why is dividing your risk so important? Okay, so here we're in a little bit of profit. Oh, we're at 2 ticks right now. Now we're at 3 ticks. So maybe we've gotten filled. Maybe we wouldn't have gotten filled if we'd had it at 3 ticks. A lot of the times, the price action hits your price and doesn't fill you and then bounces back. That can happen too. There's lots of things that can go wrong when you're trading. You know you're supposed to get in on the touching candle, but for some reason on this day, you didn't have your coffee, you didn't get enough sleep, and you make an oops. Oopses happen. That's the point. The point is, we try to be perfect, but sometimes we make mistakes. This is where you have to factor in the mistakes. How are you going to deal with the mistakes? How are you going to manage your risk? Plus, the indicators are not always perfect. Sometimes it shows you an entry that you think is good, and then it changes on the very next bar because an HFT comes and changes everything. That can happen. It's an imperfect world, and we have to work with the good and the bad. So what I'm demonstrating here is I want you to think with trading not only from trying to be a perfect technical trader and trying to take the right amount of risk or make the right amount of money, But I also want you to factor in how you're going to manage your mistakes. There's a human error side to this, so we have to have a plan for our mistakes. So look, it almost gave us 3 ticks. It didn't quite give us 3 ticks yet. Now we're at 1 tick, and most of us would still be sitting there wondering, is it going to come down some more? Is it going to come down some more? Should I get out? Shouldn't I get out? What's going to happen? Now watch what happens in just a little bit. Was our right balance of the 100 on the 50-minute chart? Yes. So now notice the reason why we look at a 50-minute chart is because there's other information from the bigger picture. Here you can see we're hitting the 100 moving average, and you can see, look at the angle of that 100 moving average. That's a huge clue. But we're really in something that's not, you're not sure. I mean, look at the strength of this bar. It looks like this candle could suddenly just drop to the R4. That's how it looks to me. So even if I was in this trend, I would probably stay this and see, you know, and I got in, look, we're still in the profit here, but some of you may get in slightly even later than I did. I got in slightly early, and some of you may get in slightly a little later. Anything can happen when it comes to mistakes.
Just the end of the trade.
So what will happen in this type of scenario? Some of you say, well, maybe it'll continue, I'll go for a few more ticks.
Yeah.
And you don't put an exit point, and then suddenly it bounces back and you lose your ability to make profit. All these kinds of mistakes happen. It's not a perfect world.
Let's say it's going down.
Moderator last night said on the dome, if you have an ATM strategy in place and you hit the close button, and close your trade out, you will lose 15 tick penalty. Yes, I talked about that last time as well. You must never, if you have an ATM strategy, you must never hit the close button. It's better for you to move your target onto the price. Okay? Never hit the close button. If you hit the close button and you have an ATM strategy on there, you can lose 15 ticks. Now, if you have it on none, like I have as a bracket order, then it's okay. It's only if you use the ATM strategy where you have the green bar and the red bar there. Okay, so I got in slightly earlier than I wanted to demonstrate this point, but I'm going to speed this up a little bit to demonstrate this. Why didn't you enter on the touching candle? Because I'm trying to just demonstrate the type of mistakes that you're going to make. How many in the room have done one of these trades where you entered too far from the 13? Who has done this? Look, I've just got hundreds of yeses. Some of them saying dozens. Some of them says 1,000 times. So let me tell you right now, you're going to make this mistake. I don't care how many times I tell you. How many times I tell you, it doesn't matter. You're going to make this mistake because it's human nature. You can't see things perfectly every time. So we need to talk about risk. How do we divide risk and how do we manage the mistakes? It's part of your trading plan. You're not going to be perfect all the time. So now we didn't take our profit, okay? And if I had entered later, which that can happen too, some of you may enter down here. It looked like the trend was continuing, and now the trend has turned. So can you see what's the first thing I want you to notice? Now, let's talk about what we covered last week. So, the first thing we're going to look at in terms of risk is our strategy of choice still in motion? Okay, last week we talked about the HMA color change and using the 3-minute chart as our simple chart. This is our simple chart, right? Because we only have the HMA color change. You can add the Linreg 9 if you like. You can use fractals or take it off. You can leave the MACD and Stows if you like, or take them off. But this chart is a simple chart. Notice that my 1-minute chart is got everything that I want on it. My 15-minute chart has got everything, and even those I'm using the Mel Basic template. Okay, I suggest you start with my Mel Basic template and the Mel Basic chart. Don't use every indicator that we have. Shadow Traders evolves over time, and the reason we have a lot of indicators is because some people everybody likes something different. So we like to continue to accommodate people. The key thing is you want to choose an indicator that makes your strategy stand out. Remember, you're only looking for 4 good trades. You don't need to do everything. You're just looking for the 4 best ones. On the Mel Basic chart, you can add the HMA color change. Okay? If you right-click and go to Indicators, you will see the HMA color change. And it is in Section 7 of the self-paced course. You can go and read up on the HMA indicator. And it's at the period of 14. It's the default. You don't need to change anything. You can change the plot style if you like. I'm going to do support and resistance next week. I don't have enough time to do all of what I'm trying to show you tonight. I want to mostly talk about risk. Okay, we can talk about technicals until we're blue in the face, but if you're not balanced in how you use the technicals with your risk factor, it doesn't help you if I just focus on indicators. You're still going to mess it up because you're going to make a mistake like I just showed you, all right, or you're going to not manage your risk correctly and you're going to lose no matter what. I'm telling you right now. So I want you to look at what I'm about to show you. Last week we talked about using the 3-minute chart, and one of the things we want to focus on is the candles above or below the HMA line? So that's a clue as to whether things are going good or bad. Here is the candles. Can you see they are above the HMA line? Here the candles are below the HMA line. Okay? Yes, remember I said north of the border or south of the border. Are you trading in Canada or are you trading in America? Here the indicators are south of the HMA line. So here we are in our bad trade. It was good. We didn't take our profits and now it's turned bad. One of the first things we can look at by looking at 2 charts, having one simple chart and one chart with everything on it, is we notice right away, because remember this is the chart that makes our strategy stand out. And what do we see? Candles are above the HMA. It would be time for me to get out of my trade by moving my target onto the price. Notice that I'm only going to lose 4 ticks. That's $50. Not $150, $50. And if I was really paying attention, I could have noticed that the HMA on my 1 minute change color a lot earlier and maybe only lost 2 ticks. Sorry, here. So by focusing on your most important indicator, that's going to tell you things are good or bad, you can manage your risk better. Get out of your bad trades sooner and choose the good ones more often. But let's say you don't notice that. Here's where having a second account really helps. Now what we're going to do is divide our risk. Let's pretend this is my second account. Let me do this. Okay, let's pretend that this is my second account for the euro. Okay, so I got euro in one account, account A, and this is account B. And I'm not sure if things are going to come back down. What I could do, let's let it play for a little bit longer. What I could do is I could see my entry point. Here's my Stozer at the bottom. Here's my perfect trade. And I could place my order on my second account to go long. Now I'm hedging against the first account. So immediately I'm trading in the new direction in the second account, and I'm cutting my losses on my first account. This alone, oh, sorry. I hate it when it does that. I feel like I just got my head blown off. Hold on. Sorry. It's doing that because I'm trying to be on a fake market. So let's pretend this is the euro. Okay. I know that this is different. I have to make this different because in a sub-account, the trade would not be there. So now notice the price action is going long. If I had placed my order on this account, I would be recouping the loss that I'm taking on this account. So can you see that I've now managed the risk by hedging the same trade, the same loss, by making an opposite trade in a sub-account. And you can do this provided it's not as exactly the same time as your entry. So we got in at 20:53 over here, and now we're getting in at 1 o'clock in the opposite direction in your sub-account. You would feel more comfortable to get out if you were going long in the new direction in the new account. Kathy says every week you're a genius. You prove your genius. So can you see? That's cool, but how about just reversing the trade? Well, you don't want to just reverse the trade because here's the next part I'm going to show you. Here's the next part I'm going to show you. You don't want to just hit the reversing trade because a lot of times, watch what happens. Let's say you had a knucklehead moment. Now we're at a $150 loss. We're in this trade. We're making money. Let's say you didn't decide, you wanted to see if it was going to come back down, which that's a common problem we have. We think, oh, it's just going to go up a little bit and it's going to come back down. I'll keep the trade going, right? Instead of waiting for that scenario or getting out and taking the hit, you see, a lot of the times we don't just reverse because we are not sure if things are going to work out. It's much easier to just place a new order and see it be profitable right away, and then watch what's going to happen. You'll notice that the price action is shot up, And immediately, it's now going to come back down to do its gap trade. Now, what you're doing is you're minimizing your losses on the first account by waiting for it to come to, it's for a nice exit opportunity where the price, as the price comes to continue its cycle, because once it hits a certain barrier, it's then its next move is to come back down and close the gap, right? So you're going to be monitoring the strategies and figuring out what's going on in terms of the market. Now you could just put a stop and just say, look, I'm going to put my stop of 10 ticks or whatever your ticks, and if it hits my stop in this account, that's okay because I'm making money in this account going in the new direction. There's many ways to do this. What I have found is that people don't just hit the reverse button. They don't just get in and then immediately change direction and then get in. They don't do that. You don't react that quickly. You'll find that it's much easier to get in, make some profit, even if it's 3 ticks in this account, and then manage your losses in this account. Now notice, look, it's coming down to 87.50. Now it's down to 75. Now we're on the 13. We're getting to 13. What do we notice about the 13? It bounces. So now we can get out, oops, and now we've only lost 87.50 on this account. And we've already made some money. Now watch what happens next. Let's see what happens next year. What do we know what's next? If the price action hits the 13, notice that our 3-minute chart, we're still above the HMA here. The HMA is still green. Remember we talked about that? And what do you see? You see the 200 at 30.41. If this is still green, and we have the MACDs and the STOs still going up here. Notice the MACD and STOs are starting to go up on the 3-minute chart. There's a strong chance we could have a nice trend trade opportunity going to the 200. So let's take a look here. Here's our support fractal that just came in. And we're going to watch to see where the price ends up going in just a second here. Now, we could have gotten out slightly later, taken a few less ticks. I got out a little prematurely, but I like to get out right at the 13 because I know that it's likely to bounce there. So you can't have you can't have two doubles on the same account. Do the same thing? No, you can't have. You can have two doubles on the same account, but you can't trade two different directions. If you got one trade going, watch here. I'm going to put it on the euro. If you have one trade going, immediately it's going to appear on the other one. So let's just say I'm going to go long here. See how it appears on the other one? So you can't trade in the opposite direction on the other one. It actually has to be a different account. And then it will be blank. It'll look like this. So if it's a different account, then you can trade two directions. Now, if this was a different account, guess what? Look what's happening now. Now the market's going up. Hold on 1 second here. Let me just change this back to none. You can call it a different ATM. Yeah, but you still can't execute in opposite directions in the same market, not in the futures market. You can do that in the Forex, but not the futures. Now watch what's happening. Oops, didn't mean to do that. Sorry. Watch what's happening. Okay? Here we are, we're going to the 200. We're taking our nice little trade opportunity. Notice my second account, I can put the same trade on. Also, I can do it in the same market. Notice that the 6A is also going long. I know one's on the 6E and one's on the 6A, guys, because I can't show you a sub-account on replay. I can only show you one account on the replay. Okay, let's pretend this is a 6E. But what you will notice, if you're paying attention here, okay, here's a 6A. So another way to divide your risk, is to put one trade in one market and another trade in another market. Now people say to me, why would you do that? Why wouldn't you just put two contracts in one market? Well, that makes sense, except for the fact that the markets will fill you differently at different speeds. So sometimes the 6A will fill you very quickly while the 6E will trickle along. Sometimes the 6E will fill you quickly, as it just did, while the 6A trickles along. Either way, you will feel more comfortable because while one is filling you more quickly, now you're only risking one contract instead of two contracts and putting all your eggs in one basket and trickling along. Can I show the 15-minute chart for a second?
Oh, why not?
Sure. There, the 15-minute chart just went green. So whether you're using one market and two accounts, or whether you're using two markets, trading one account in one market and the other account in the other, as I just showed you with 60 and 6A, both ways are going to minimize your risk. Here's the 6A, here's the 6E. Do you notice that they both went up at the same time? Most of the time, they're going to do that. Also, they're going to stagger.
Bill Gates can do this. I swear to you. No, I mean, he's too old.
Can you repeat the support and resistance considerations? I'm not talking about support and resistance tonight, guys. Support and resistance is next week. So can you do this with one market or two markets? Are you minimizing your risk because you are only trading one contract? I am minimizing my risk because I'm trading one contract, but why I'm minimizing my risk is because I am, instead of putting all my eggs in one basket and hoping that it works, I'm now splitting my eggs, and chances are one of them is going to give it to me. So let's say, you know, what often happens is people do things like they're getting too late. Let's use the 6A for an example here. Let's say you got in here right at the 200. Everybody's made that mistake. They see the momentum and you're getting one of these, right? If you look at the time slot, notice that by the time you get in this trade, if you went in all in with two contracts, now you're going to hope that it fills you before it turns on you. Notice the 6E went a little further in price than the 6A. If you look closely at the 6E, we're in the same exact position in the euro market, but we got a little bit more price out of that same move. So we have now divided our risk by putting, instead of two contracts and betting on the 6A is going to work out 100%, which it doesn't. Now what I say, instead of doing that, have the 6E and the 6A up and put one contract here and one contract here. And chances are one of them will give it to you. So you'll get your three ticks right away, and this one turns on you. Well, guess what? You get out of this trade, and you know what's coming next. The euro's going to come down, and you can always go short and make up the difference. The HMA is sort of to replace the LO9, not the
She's
LO4,
made everybody
yes.
crazy.
I see that in your dome you have the price that is red and the price that is green. What is the purpose of that? How do you set that in properties? It does it automatically. The red means that you've lost money, and when it's green, it means you've made money. So it should automatically be there. Does the second dome auto access the second account? Well, when you have two accounts by your broker, you click the account tab over here, and you will have the option of choosing two accounts. You will have the option of choosing it here by hitting the drop down, and you can put one dome on one account, and then you go down here and you put the other dome on the other account.
I'll tell you, someone like Samantha.
So basically, we're splitting our risk because we're playing the probability factor. And like I said, the markers don't move exactly at the same time, and they don't give you the same price. So one might peter out, and the other one will definitely give it to you. So you've now divided your risk, and at least you know you're going to get something, as opposed to all in one market and hoping and praying, and then it turns on you like over here, and now you're a sitting duck, and you're wondering, is it going to come back? And by the time you decide what it is going to do, you suddenly lost $150. Instead, you've lost a few ticks on this one, you've made some on this one. Who cares? You're on to your next move. Do you get the point?
Yeah,
this is why having two accounts is so important. There's a lot of things you can do with two accounts. Now, if you don't have enough money to fund two accounts, like I said, you have to be really conservative and do no more than 4 3-tick trades. And you better practice first, taking the technical approach by using one main indicator, making it stand out, focusing on 1 or 2 markets, so that you ensure that you get your 4 trades, and you do it for 20 days to make your $3,000 to fund your second account. This is not rocket science, people. This is common sense. Okay? This is the approach that I took. This is not rocket science. I can't tell you how many people put $10,000 in an account, and they chip away, put 5 contracts in, double, add more, ride trades out, and they suddenly down to 5,000, to 3,000, to 2,000, and they can't make a winning trade if their life depended on it anymore, and they blow up their account. Is a sub-account considered a second account? Yes, you don't have to fill out the paperwork again. You just call up the broker and say, I want to trade different strategies. Give me a sub-account. And you have to wire the money from your bank. You can't say take some money out of my first account and put it in the other account. You actually have to take the money from your bank account. Can we get a copy of the trading plan document? I am going to put it on a video, and this weekend I'm going to make a video. It'll be there by next week, and from Monday, and you guys can watch it in the FAQ, because I'm going to go through all of this in real simple steps, make it real clear in the video, because I'm telling you right now, a lot of you are losing money in a very silly way, because you're not following simple risk management. You're just doing very risky things, and you're not taking the calculated risk approach. So I've always preached about 2 accounts. I've always said that, and I've always talked about start out with doing 1-tick trades, then doing 2 trades a day or 1 trade a day, build up to 2 trades a day, 3 ticks, and I still get traders trying to do 5 markets, 4 markets. They're trying to do every clear trade and gap trade and so on. So you get the idea. Now let's talk. So now notice, I want to just quickly show you one more thing, and then I'm going to elaborate on the indicators a little bit more in terms of making your strategy stand out. We're going to talk about that in terms of managing your risk. Because right now we're talking about dividing your risk between two accounts. You can either trade two markets, or you can trade the one way in one account and trade the opposite way to make up for your losses in the other account. I'm not sure, Dylan. I would email somebody about that. I would call the email Ninja Trader on that. Was the perfect trade on my chart? Yes, this was the perfect trade. Right here at 1 o'clock. At 1 o'clock. So the other way I showed you is you have two choices here. You can, in terms of getting out of your bad trade, you can either get out when your indicator tells you to, like the HMA changes to green, or you can focus on getting in your sub account on the new direction and then wait for the next pullback. If things happen very quickly, you don't have time to react on this trade, okay, because sometimes you don't always want to react right away. So rather than trying to react, getting in and out and hitting the reverse button and all this good stuff, let that trade alone and focus on getting on the sub account in the new direction, making money right away. Then you can take a step back and look at what's going on. And if you see it starts to do its gap trade, then it's time to get out of this trade and focus on doing another one in the new established direction. Is that clear? It lasted 25 minutes. My attention is not. No, well, you could have gotten out a lot sooner. You don't have to do that. But here, I mean, look, we got executed. We made our money very, very quickly here. But here's the other thing that I want to talk to you about. I'm going to speed this up for a second, and I'm going to show you the 6A and the euro for a minute. See, I just want to talk about the advantage of splitting your risk in terms of execution. Just for a second, and then I'm going to come back and talk about the indicators and the HMA. Okay, watch what happens here. I'm just going to speed this up for a second here. This is what happened this afternoon. Now, I want you to know that the price action moved 100 ticks this afternoon. Okay, so from this 1 o'clock move here, this 1:30 move, it moved 100 ticks. Now notice, look at the 6A, and see how the 6A is dropping like a rock, and the 6E is coming down to its 200 and holding. Even though it's still red, it's showing down, but notice it's holding to its 200. This one came right through. Why? Because we never penetrated the 200. Notice where the 13 is. So they're going to both show you red or green. They're just going to give you different price action. So you can use that to your advantage. You can use that to your advantage. You see that we're coming down. You see that this is below the 200. You can take your trade here, and then you wait for things to go long again. Now you have another clear trade opportunity. Coming in the euro. Now watch here. Look how the 6A is shooting up and our euro is trickling. But it's still going up. There's still lots of price action here. So do you see how one market is going to fill you a lot faster? And if you see that this is performing well, remember, you're only in one market with one contract, the other market with the other contract. You can, if you're in a scenario like this, 2 o'clock, where we had a very nice fan, You can always say, I'm going to let this one go a little bit more, and I'll just take 3 ticks on this one. And you're going to get used to that scenario when you start to look at two markets like two currencies, or two volatile markets like, you know, gold and crude oil. You'll start to be able to get a real feel and follow the indicators and the price action more. But you'll be able to improve your performance also, because you're not just betting on one market always delivering the goods. Now you're splitting your probability factor between two different markets, and chances are one of them is going to perform really well while the other one kind of gives it to you. So you've increased your opportunity by looking at two markets. And these are my two favorite markets. I always trade every morning the 6A and the 6E, and I trade them all day long. And I usually scalp sometimes in the gold or the Russell. But most of the time I'm trading the 6A and the 6E. Okay? So let's talk about technicals for a minute. Let's talk about how we can be more balanced in looking at the technicals. We talked about risk, dividing your risk, and how you can follow the trading plan to create $7,500 a month. Now remember, if you become a real whiz, instead of doing 2 trades a day, 1 trade in one account, remember at 5 contracts, all you have to do, guys, is sit there long enough and wait for one market to give you 3 ticks with 5 contracts, and the other market to give you the same thing. 2 trades a day gives you 5 contracts, gives you $7,500 a month. Now, if you become a real whiz, you can do 2 trades in one market and 2 trades in another market. Now you made 4 trades a day, 5 contracts. You're going to make $15,000 in 20 days of trading. This is not rocket science, guys. It's all about your approach. But you will never get to 5 contracts if you don't start with building your account and creating a sub-account. You will never get there. You will always be the guy that's stuck on 1 or 2 contracts, winning and losing, winning and losing, winning and losing. You will never get there. You will never get there if you don't stick to just doing 2 trades a day or 4 trades a day for the first 30 to 60 days. Okay, if you try to do 10 trades or 15 trades or 6 trades, you will never get there. You will win, you will lose, you will win, you will lose. This was the secret to my success. Okay, I did, in the beginning, I think I needed 2 trades a day, and then I created a sub account, and then I went to 4 trades a day, and then I went to about 6 trades a day. But by that time I was already at 5 contracts, so the money was really good and it was easy for me to continue. So even if I had a little oops like this one over here, it didn't matter because I'd already created a surplus. Does that make sense? How many ticks in Plan B? Still 3 ticks. Plan B is still 3 ticks. It's just 5 contracts. Remember, all you're looking for is start out with 2 trades a day if you're really nervous. Take a little longer. Remember, take your time. And then do 4 trades a day. A lot of your problem, most of the traders that I have, most of the problem is that they're too much a technical analyst. You're too much focused on the indicators and not enough focused on how much you're going for. You're not the entrepreneur. And if you are the entrepreneur, you're taking too much risk. Trying to go for too many ticks, too many contracts, overnight trading, whatever. You're not taking the conservative approach to your risk. Okay? Remember, create a trading plan that is conservative and easy to execute. Ask yourself, is your trading plan that you're currently doing easy? Do you feel like you're working very hard every day trying to find your moves? If you're working too hard, then something's wrong. What's happening to you is you're either doing too much risk, too many trades, or you're focused too much on technical analysis. You're too much of this. You're unbalanced. And so let me explain how we can solve that problem. Let's look at the technicals for a second. Remember last week we talked about the HMA, and I said at the very least you should have two charts. One is a simple chart and one is with everything on it. I suggest your 1 minute has everything on it and your 3 minute is sort of your trend director. And what you're going to do is you're going to focus on, let's continue here because there's another move coming. You're going to focus on, watch here, the HMA. Now remember, we're using a simple indicator that makes our strategy stand out. And in the strategies, we learned what is a trend trade, what is a counter trend trade, and what is a reversal trade. And our reversal trade is the trade where we focused on the MACD and the STOs crossing at the same time. So when it comes to your strategies, you want to pick and choose which strategy you're going to focus on. Let's go back here for a second. Remember I said you have to choose a strategy and then you want to create a simple chart to make your strategy stand out. So if we look at this, you've got only 3 choices in the world of strategies. We've summarized all price action into 3 choices. Here are your choices. You can either do the clear trade, where the price is clear the moving average, and you want to enter from the 13 trading to support or resistance, being a fractal or a pivot. Okay, and ideally if you're following my conservative plan, you just get in here and you take 3 ticks. That's it. The further away you get in from the 13, the less chance you have of getting filled, because things can turn on you at any time. The closer you get in at the 13, the better chance you have of getting filled. And you always want to try to take them, only the ones that have 3 or more moving averages back in the direction. If you're not sure about this, you can watch more videos over the weekend. Now the gap trade, that's strategy number 1. Strategy number 2 is the gap trade. Now the gap trade, you can either just trade immediately when you see the circle with the dot and your LINREG or your HMA changes color. If your HMA, using the HMA, if it changes from red to green, and you notice your candle is on the right side of that HMA, going in the right direction. You don't want to go on a green candle if the HMA is red, or if the candle's not clearly above it. So you can then take your 3-tick gap trade going towards the 13. You don't want to do a counter trend trade if you're already on the 13. So something like this would be really nice here, taking your 3 ticks. Now the third strategy is the reversal. And very simply, we are focusing on the HMA have changing the right color. So we're going long, it's green. If we're going short, it's red. And we're focusing on the 13 and 20 crossing. But what we're also looking at is the MACD and the 3 stows. Call this a perfect trade. When the 3 stows are clustered together really tight, these are the ones that are really good, as opposed to when they're just kind of spread out. But when the stows are clustered together, notice that the MACD is crossing together, and at the same time, our HMA is clearly green. You can jump in anywhere here and grab your 3 ticks. This is called the reversal trade. You're trading on the trend change, and you're looking for that to line up. Also notice that the MACD has to, if you're going long, has to be below the center line. If you're coming short, the MACD has to be above the center line. Oops, audio is breaking up. That's strange. Do you just grab 3 ticks or just once? Okay. HFT whips so fast that you don't know if you missed it already. Well, if sometimes it does, but remember, when you're looking at a reversal trade, you're entering here ideally in the gap trade before the HFTs come in. And if the HFTs come in, you know what? There's always another one. Sometimes they do come in and close the gap really quickly. Just then move on. Remember, you're only looking for 2 to 4 trades in 2 hours. That's 1 an hour or 2 an hour. There's going to be something for you to trade. And if you have 2 markets up, I assure you, you're going to find something. And you're only looking for 3 little ticks. I assure you, it's not any more difficult. The only reason that you are experiencing the difficulties is because you're trying to do too much. It's okay for something not to be perfect once in a while. But you're going to find one that's pretty good that you can trade. That's all you're looking for, one that's pretty good. Who cares if it wasn't perfect and the HFE came in and the thing didn't go here and that didn't happen and this? Who cares? That's going to happen all day long. It's not 100%. It's not perfect. Get it out of your head that these indicators are perfect. They are not perfect. Things are going to go wrong. Things are not going to do what they're supposed to do some of the time. But remember, if you're conservative enough and you split your risk, chances are, even if you have an oops, if you divide your risk, you will find one that works if you're going to look for 3 little ticks. I assure you, this is a real conservative approach. So we're looking at a trend trade, a gap trade, or a reversal trade, right? Those are our 3 strategies. So now that we've decided what our strategies are, let's look how we can make it stand out more. So obviously, for the trend trade, we want to look at where the majority of the moving averages are most of the time. Okay, we want to trade with that. And with the reversal traders, we want to be looking for the MACD. Okay, and for the gap trade, we want to be looking at the space, but I say most importantly, the HMA color change and the position of the candles. So what you can use to help these things stand out is something like another time frame, your 3-minute chart, and you're following the direction of your candles. So if I was doing a trend trade back here, I see, oh, my HMA on my 3-minute is red, everything's moving nicely, got my touching candle, yes, this is red, I'm going to take the trade and go for my 3 little ticks. If I come to the gap trade, I see my HMA is green, this is going above the price, got enough space before I hit the 13, I jump in and grab my 3 little ticks. If I'm doing the reversal trade, I look for the stochastics and the MACD. I jump in and grab my 3 little ticks going to the 50 moving average. Are there any questions about that before I move on? Is the 1320 cross the reversal? Yes, it is. Do you find in your trading daily this is the case, not always taken out by an HFT? I'm not always taken out by an HFT. In fact, most of the time, let me tell you guys, if you're trading clear trades and even some of these reversal trades, look what just happened with my entries. The HFTs came in and filled me faster. They filled me faster. The only time you get taken out by the HFTs is when you break the rules for your strategy. I'm going to say this again. The only time an HFT is taking you out most of the time is when you break the rules for your strategy. So let me explain that. Because if you follow the rules for your strategy, chances are the HFTs are going to help you get filled more quickly. Let me show you what I mean by that. This is where HFTs come in. Okay? I'll actually put squares on this is where HFTs come in. Here's an HFT bar. Can you see that bar? Okay. Now, here you are, you're trying to do a gap trade. And suddenly, how do you know they are HFTs? Because they are huge bars most of the time, or bars with long tails or wicks. And what you will notice is that the price usually reverses right after it. The price usually goes, or within 2 bars, reverses right after it. Okay? Now, what happens in HFTs, this is where you get caught, where you break the rules. You're not going to be doing this as your number 1 gap trade. Why would you not be choosing this as a gap trade? Who can tell me? Why is this gap trade not a good idea? Which one? The circle. Remember, I just said that the reason you get caught by HFTs is because you break the rules for the strategy. So I'm showing you this HFT. Now, the only way I would get caught on this is if I was doing this gap trade here. Guess what would happen? Here I am waiting for my 3 little ticks. I jump in somewhere here, and bang, an HFT comes and takes me out, hits my stop before I could get my 3 ticks. What is wrong? What rule did I break with that gap trade strategy? Okay, dojis, fist. Well, you wouldn't see the doji until after the price. First move to the 13. Yes. You never want to do a gap trade unless it's after a news item. Okay? You never want to do a gap trade unless it's after a news item. Okay? Especially on a downtrend. Going into the moving averages. You are countering the trend. You never want to do it right close to the cross against the moving averages. If you got the moving averages backing you, it's a different story. But still, can you notice here, there's no gap trade because now we have the moving averages. So never counter the moving averages. You rather want to do gap trades over here when the stows are ready and your MACD's lined up and it's the end of the trend. Could we see the 3-minute chart again? Yes. So it wasn't that the HFT was the problem. Here you can see it on the Here's our 3-minute chart. And notice that we just went above the 3-minute chart, but the HMA is still red. Look at the MACD. Those are still coming down on the 3-minute chart. So it wasn't that HFTs are terrible and it took us out. That's not the problem. The problem is that you just did a lousy time to choose to do the gap trade. Because the HFTs are going to come in and start the trend. That's what they do. Now, if you're doing a trend trade, okay, you obviously would not be entering here. Why would you not enter on this square to do a trend trade? Who can tell me? Why would you not enter? After the HMA change color, do you get the doji in if it's a doji candle? No, you don't want to get in on a doji candle. Why would you not get in on a clear trade there? Because the HMA is green, correct. All those you say green is you get a cookie. Okay? It's green. It's the wrong color. Remember, we're using our HMA to help us. So you want to choose an entry point somewhere over here where you see you on and the HMA is the right color, everything's the right direction. Now we do our trend trade. So now let's say we get HFT'd out of the market on trend trades. Where would you get HFT'd out of the market on trend trades? Well, you will get HFT'd here. Would you do a trend trade? Look, you jumped in here and the market whipsawed on you and you just got stopped out. Well, it's against your main important trend line. That's not the right time to do your trend trade. Here's another place that you would get stopped out. If you jumped in at the end of the party, this is where HFTs come in, and then the price turns. Remember, the price turns immediately after an HFT. Okay? Here, you get these long wicks and tails. If you entered here too far away from the 13, the price will turn. So, here's another. These are classic HFTs, long tails and wicks. This is a classic HFT. When you see those long wicks and tails. Now, would you be entering your clear trade here? You see, if you entered your clear trade up here, your trend trade, you would have made your 3 little ticks. So how could you get HFT'd out of the market? The only time you can get HFT'd out of the market is you were late. Okay? You were late. You were trading at the end of the party. Here's another place. Here's the trend. Trend is going. And here the trend has come to an end. And you jump in. See these long wicks? Suddenly the price turns on you. Okay? It's the fizzle. It's the end of the move. And if we look at 1040, see. Look at your 3-minute chart. What side of the HMA is the candle already? What side is the candle to the HMA? It's south of the border. That alone should have kept you out of the trade. So you wouldn't have gotten in that trade and been HFT'd out of the market if you were following a simple rule to help you to stay in line. And the rule is this. Can you show and talk about live Australian market for the major news item in 20 minutes? I don't know if I can do that right now. Not going to get into news. That's for another night. Great explanation. So can you see that you only get HFT most of the time? Now every once in a while you'll get a doozy, but you know, where you get in on a big candle and it turns on you. But if you stay there, look, even if you got in on this candle up here and this candle came in, went a little, it's going to fill you really quickly. But the only time you get in HFT'd is when you go in late on the chain at the end of the party, or you're not paying attention to the bigger trend information. So here, using your 3-minute chart, and this is what you want to focus on. Remember what we talked about here? You want to choose, in the world of technicals, you want to focus on one main indicator or pattern that helps your strategy stand out clearly. So you're not going to get faked on every move. So what we want to look for, as we discussed last week, is when the 3-minute chart HMA changes from red to green or green to red, and we want to wait for the candle to get above or below the HMA. And ideally, if you're not sure, you want to wait for the second bar. Wait for the first bar to close and get in on the second bar. So here in this scenario especially, I would rather wait for this bar to close and get in somewhere here and then get filled. You can even wait for this bar to close and get in somewhere here. It works out nicely. Or if you see it's a big bar going through like that, it's a strong trend. Here's your reversal. You've got your MACD and your STOs giving you a very nice, perfect trade. Because you got the support of those to back in your direction, I would not hesitate. And if you look at that move, you can see that your 1 minute gave it to you really nice. So that when you put the two side by side, it starts to become much clearer. Now that you're south of the border, you see there's a long wick. Remember what a wicks mean? That there's fizzle. Things are fizzling out. They couldn't sustain. They couldn't continue. That's what that wick means. The price shoots up and it couldn't hold it. See, here the price holds. Here the price holds. They couldn't hold it. They came down. Things are got to fizzle. That's what the wick means, or the tail. Okay? If it's a true strong trend, you will see it's going to be a big fat bar and it's going to hold. But when you see these long wicks or tails, it's time to get out, and it's not time to get in. So you would not be jumping in here at 1040 looking for an opportunity, because the candle is below the HMA and things are about to fizzle. So you wouldn't be HFT'd. And that's the most important thing. By using the 3-minute HMA, it's going to help you to avoid some of that. What if 4 trades a day, 2 losses and 2 profitable? Let me tell you right now, if you are conservative enough and you use the simple format with the HMA color change, south of the border, north of the border, trying to catch the clear trade or the reversal trade, chances are you're not going to have 2 losing trades and 2 winning trades every single day. You might have it on your first day, but you're not going to have it on your second day. And if you go for one contract and you've got $2,500 in your account, it's not going to kill you. And secondly, if you use my divide your risk format, okay, divide your risk between 2 accounts, chances are you'll be able to recoup some of the losses. Guys, we're talking about a hypothetical scenario, and if you just get going and you stick to the rules and trading with this amount of control, the odds are in your favor. It's only when you lose control and you start looking at too many indicators, you're too much of a technical analyst, grabbing everything, or you're too much of an entrepreneur try to make lots of money by doing too many trades, too many contracts, then you will lose. Is that clear? Businesses don't have perfectly profitable days every day. Good point. You're in it for the long term. Look, most of you have been around to about 3 or 4 other systems, spending thousands of dollars on education, and you still here. Most of you, a lot of you have blown up 2 or 3 accounts, and you're still here. So start becoming profitable by putting in more control. You control your destiny. So don't worry about the what ifs. Who cares about the what ifs? You're going to make a mistake here and there. Okay? Who cares if you have a losing trade? My goodness, I lost $100,000 in one trade. $100,000 in one trade, and I'm still, if you didn't look at all this price action we had from 8 o'clock, look at all this drop. Here's, here's a nice clear trade. Here's a nice reversal. There's your MACD, your stows, okay? Here's a nice clear trade, 10-15 run up. There's your fundamental. All you have to do is find two. You show up at 8 o'clock, 8:30, you get your 3 ticks here. Even if you sit there for a whole hour, wait through the 9:30, wait for the 10-15 fundamental if you like. It's not always perfect every day, but you sit for 2 hours, you find one an hour if you like. Okay, maybe you do the afternoon session. Here's 1 o'clock. Let's look at how much price action. Here's 1 o'clock, it started, the market starts to kick in between any time from 12:15, 12:30 in the afternoon is a good time to trade. And you want to be done by 3 o'clock. Okay? Don't trade past 3. I usually don't trade past 2. But anyways, look here, 1 o'clock, the price action moved. I'd have to fast forward this. Aren't they asleep at that time? No. 1 o'clock in the afternoon? They're not asleep. This is a global market. The euro, the currencies are mainly traded in the forex. It's 24 hours. Look here. The price action started at 1 o'clock at 30:20. And look where it peaked. 30:20, and it went to 31:25. That's 100 ticks, guys, in the afternoon. And it did it all between 1 o'clock and 3:30. It did it all. That's over 100 ticks, guys. Can you find 3 little ticks? If you just followed the HMA or the moving averages. And this is not unusual. Let's go the day before. Look, here's the day before. These are my back testing some stupid things. But anyways, yeah, let's look at the day before. Look at the 2 o'clock reversal here. Look how nice the 2 o'clock reversal was. They ran to the 28.50 all the way to 29.50. 100 ticks in 15 minutes. Actually, yeah, 15 minutes. They jumped 100 ticks. Can you find 3 little ticks? I was watching all of that today, but was hesitant. It was above the R4 all day long. Yeah, when it's tricky, when it's above the R4, but all you have to do, guys, because you're going for 3 little ticks, as long as you follow the moving average clear trade or gap trade or reversal trade strategy, and you use something like a 3-minute HMA to help you stay true to the direction, then it doesn't really matter whether you're above the R4 or below the S4. Can you find 3 little ticks? The answer is yes, and you only have to do it twice. Double your account, take your partner out to dinner, and then go at it again. One trade in each account, minimize your risk. If you have an oops, trade in the opposite direction with the other account. This is not rocket science, guys. You're making it too complicated. You need to simplify and be more conservative. It's that easy to make money. The reason you're not making money is you're making your technicals too complicated and you're taking too much risk. That's simple. So I want you to become the balanced trader. A little bit of technicals, a little bit of risk, nice and conservative, and do it day in and day out like a boring old job. And you will make money. Thanks, Medea. Great. Denise says, great class, total sanity. Thank you so much. Guys, at least 24 hours before you trade. So for those guys who like a nightcap, if you want to be successful, you wonder why you've been losing all the time, quit drinking during the week. Go party on the weekends, quit drinking during the week. Excellent. If you enter on the 3-minute HMA color change, what are you doing with a 1-minute HMA color change? Well, they're the same thing. You're just using they're actually going to appear at the same time. Like, let's look at this 1020. The 3 minutes going to come slightly after, like here. Okay. The 3 minute probably came between 1021 and 1024. So if you look at your 1 minute here, your 1 minute's going to give it to you first. You're not going to jump in here because you don't know if it's going to come right back down. Look, here it changed, and here it came right back down. So you see the 1 minute goes first, 1021, and you go, well, could this be my opportunity I'm looking for? I see the MACD's about to cross. Those are at the bottom. Could we go to the 200, you're thinking? Now, let me wait one more bar. You can always wait one more bar. You're only going for 3 little ticks. Okay? Let me wait one more bar. Let me check my 3 minute. Okay? And here we go, 23. Now you see your 13s cross, your MACDs cross, your stows are off. 1023. And here, by this time, your MACD should be changed. Your candles are going. So even if you wait, remember the clear trade rule is just a touching candle or the very next bar, you can still take your trade and grab your 3 little ticks. So you're using them together. You're using the 3 minute to confirm that your 1 minute is really a good one versus a not so good one. You see here, by this trade here at 1040, this is where you get HFT. Do you think you got an opportunity to start a new trend? Your HMA is green, candles touching. At 1042, you go here and you look at your 3 minute chart. Now, I'm not going to take that one. It's on the wrong side of the HMA. I'm going to wait. Things are about to come back down. I'm going to wait for it to go red. Now it goes red in the right position. And now you see second candle here, 1054. I'm ready to rock and roll. So you're using your 3 minute to confirm what you think could be good on your 1 minute. So wait for your 3 minute to confirm. Your 1 minute will just give you a heads up. I asked about Ninja update because I used to have AMP do it for me. Oh, that's fine. You can call the AMP and do it if you like. They'll do it for you. But you just go to their website and you just download it. Just type in your email under Ninja with CQG or whatever you use. Just download it. We'll just automatically add. Even if you've got a live account or a demo, it doesn't matter. Just click on the download and we'll download it automatically. Won't change anything. It'll just add to it. And then go to the Shadow Traders members download. Inspiring. Excellent. Is there a possibility we can follow you on a live trade sometime in the future until we get more confident? No, unfortunately, we're not allowed to do that because it's called front running. That's the one. They stopped that. They used to have trade rooms be able to do that. It's called front running. That's the reason why we have the Segredo with the trade room. You can go to the guy in the trade room. He's doing trades in there, and you can trade along with him. But and that's available for you with the Segredo. If you subscribe to the Segredo, you can click announcements. So unfortunately, I'm not allowed to do that. But what is coming down the pike is order trading. So now, if you get going with your 2 little trades and you make your $2,500, you can invest $2,500 in the order trading, and they'll make $200 for you a day. So now you've got diversification. So regardless of, you can do 1 trade a day. Find one opportunity to make 3 little ticks and invest another $2,500 and let them make another $200 for you. So there's lots of ways to go about this. There's lots of opportunity, guys. It's not been released yet, though. Is there a guarantee? There's no guarantees with trading. We can't guarantee anything because there's always risk when it comes to the markets. Never a guarantee, honey. But I will tell you, the probability factor is very, very high if you're just going for $200. If you try to go for a whole lot more, well, there's a lot more risk. Can you guys hear me? You guys can hear me. How do you trade the middle of the party on the 3-minute HMA? Here's the middle of the party. Okay, so here the reversal started. Got a little retracement here. So you can see as long as the HMA is still green and the candles are still pushing above it, and you are here at 2 o'clock, and your 1 minute gives you your entry that you're looking for. You can see here's the middle of the party. Okay, you can still go ahead and take the trade. 2 o'clock is over here. So see here, you got your touching candle. Candles above the HMA. HMA is green. And your 3-minute chart is still green, and the candles are pushing above it. You can still trade it. Remember, you're going with the trend. As long as you're trading with majority of the moving averages, chances are it's going to work out, as long as you're not at the very end of things or you're on the wrong side of the HMA. What is the ST newbie indicator? Oh, I think that's just to show you the reversals. We've called them so many different things, but they're really, all it is, it's the cross of the 13. It's just showing you this, lining up with the MACD and the STOs. Its true name is the reversal, because we're reversing direction as a market. We've coined it newbie trade, perfect trade, lots of jargon, lots of verbiage, only because it has lots of things about it. The MACD is perfectly lined with the STOs, perfectly lined with the HMA and 1320 cross. That's why it's called the perfect trade. Can you show where we find the downloaded AMP? Sure. You simply go to ampfutures.com, and it doesn't matter if they're not your broker. You can just simply download it from there. It'll just add to your license, and you just go to online platforms on the top. Click on NinjaTrader, choose whatever data feed you're using, and when you click on it, it's going to ask you to put in your information. So you just put in Melanie, blah, 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 blah. You hit Submit Demo, and then what it's going to do is going to send you an email, and you click on the download. There's a link to say download. You just click on the download. You don't worry about the password and all of that, because you're not using the demo, you're live, you're using your current license. And you just hit the download and you just run it. And then you're done with that, and then you go to the Shadow Traders website and you download the setup 7.14 and you're done.